Thank you for joining us on GlobalScienz. From Hong Kong, we'll be speaking with Sigler Goff's Ji Lee. Sigler Goff is a multi-strategy private equity investment firm which, together with its affiliates, has over $15 billion of assets under management. Welcome to GlobalScienz, Ji.
Thank you. Thank you, Bruce.
Thank you. Can you tell our viewers about Sigler Goff and your role?
So Sigler Goff is a multi-strategy private equity firm that was established in 1995 in New York. Currently, we serve over 600 institutional clients globally. And under umbrella, we have four main pillars. One would be private equity, private credit, emerging markets, and real estate. The easiest way for me to describe our firm would be that we try to find and identify the niche opportunities in markets and sectors, which can be characterized by inefficiency and lack of capital in the space. This allows us to provide our investors with attractive risk-return profile. So I myself is located in Hong Kong, which is one of our 5 offices in Asia, and I'm responsible for introducing our firm and fundraising for products in this part of the world.
From military to economic clashes, the conflict between the U.S. and China is currently in progress. What do you think is the future of U.S.-China relations?
So unlike how many expected at the start of the Biden administration, the U.S. and China relationship has been deteriorating at a rate that is concerning to many people. Having said that, both China and U.S. has their own domestic problems to resolve. China recently announced its wealth redistribution agenda, whereas U.S. has some wound licking to do after its recent exit from Afghanistan. Despite all this, the economic dependence between the two countries are stronger than ever. So against such a backdrop, I do not expect anything radical to come out from either side.
Surprisingly, President Xi Jinping recently announced that he plans to establish the Beijing Stock Exchange. What role do you expect the Beijing Stock Exchange to play, and what changes will that bring about?
So what we have seen so far, the new establishment seems to be of some sort of a rebranding of already existing National Equities Exchange and Quotation Market, NEQ. So it will primarily cater to technology-driven, innovative SMEs in China, which perfectly fits into China's recent wealth redistribution narrative. However, the current NEQ is not accessible to many retail investors. Without retail investor participation, I don't think it will have significant impact on the existing exchanges such as Hong Kong, Shanghai, and Shenzhen.
Due to tough Chinese regulations, Chinese tech stocks have taken a beating. What do you think about the attractiveness of Chinese technology stocks?
So Chinese tech stocks has always had that regulatory risk attached to them, but the fundamentals of some of the stocks that were beaten recently are still solid. From the asset allocation perspective, China is a hot market that is hard to ignore due to its growth profile. India can be an alternative, but the sheer breadth of Indian public market is not enough to accommodate the size of global asset allocators yet. Some names were sold purely because of its association with other tech stocks without any clear regulatory risks. So if anything, now would be a good time to evaluate and strategically allocate to the names that were beaten simply because of its sector or theme exposure.
Interesting. Can you tell us about your investment strategy for those who invest in the Chinese stock market?
So as previously mentioned, Chinese stocks are now largely governed by regulatory exposure. When the market is driven by such movement, it is important to focus on to the fundamental research and look into the idiosyncratic story of each company. In spite of recent price movement, if you look deep, there are companies that are limited. There are companies that have limited regulatory exposure with a proven sequential growth story. So on a longer time frame, global asset allocators will come back to China and reward those names.
Including Bitcoin, What is your view on the future of cryptocurrency?
So the way I view cryptocurrency is, especially given its volatility profile, it is somewhat safe to assume it as a commodity. So commodities tend to outperform the market when there's excess liquidity, which is just the case right now. So without getting too deep into the ins and out of the asset class, which I am no expert of, as long as the inflation trades are alive, cryptocurrencies will do well. So it's more of a macro call, if anything else, in my view.
G, what is your outlook on the global economy? A lot of people are talking about the timing of a possible tapering. Do you think that tapering is possible within this year?
So the growth of global economy has peaked in some time in July, and I expect it to go down or slow down from here. That does not mean that the inflation pressure is gone too, given the fact that much of the recent inflation was due to the supply chain constraint, which are far from over yet. The inflation number will stay elevated as opposed to the growth number. This essentially puts us in a stagflationary environment. Fed has increasingly noticed this inflation pressure as well. So I think tapering can start well within this year.
Ji Lee of Sigler Golf, based in Hong Kong, thank you so much for being with us today and sharing your insights on the market.
Thank you.
That does it for us this week. Thank you so much for being with us. And until we meet next week, please be safe and healthy.